we do have the management of Punjab National Bank joining in to talk about, of course, the trends in the quarter gone by. We have Mr. Atul Kumar Goel with us now. Sir, thank you very much. Good to have you on the show. I want to start first with the asset quality picture. Now, slippages have come down. Your gross NPA levels are looking healthier. But tell us about provisioning, because the chatter now is how will the system move towards ECL, the expected credit loss provisioning, right? Your provisions are actually down year on year and quarter on quarter. How are you approaching ECL as we get the final rules on this?
Thank you very much. First of all, as you have told, quarter by quarter, gross NPA is reducing. Net NPA is reducing. Your question about regarding the provisioning also, although the quarter by quarter provisioning has reduced, but if you see the yearly, it was around 81%, and March 2023 it was 86.9%. Overall we have increased the provision coverage ratio. And last one more thing also, the slippage was less than the every quarter of the recovery. Every quarter recovery was much more than the addition number. This was the change in the trend. Your question regarding the ECL, in this I want to tell you, it is a draft guidelines as per the RBI, and RBI we have to wait for the final guidelines. And as per the draft guidelines, 5 years will be allowed for the whatever the additional requirement of the provision will be there. As I told you, 81% was my PCR, which has increased to 86.90%. And more important, when we are talking about the ECL, it is the underwriting quality. I will give one data which we are seeing every month. 5.63 lakh crore we have sanctioned from the 1st of the July. 4.16 lakh crore is outstanding. The fresh slippage in this new book is only 0.23%. So we are not worried about the ECL, and we will be at par with the industry.
Okay, so can you guide with some numbers, sir, since you seem to be sounding quite confident on asset quality? Your slippage ratio has come down to 1.92%. Now it's below 2%. As we look at the rest of this year, a number maybe for FY24, what is your expected slippage ratio? By how much can you bring down your gross NPA levels? The NPA ratio at the gross level is 8.74. FY24, what will be your target? 6%, 5%? How much lower can you bring it?
It will be less than 7% by the end of the March 24, and our slippage will be less than 1.5%. And we have set the target, recovery should be double than the addition, and as far as the net NPA is concerned, it is 2.72. It will be below 2% by the March 24.
Okay, sorry, just repeat the numbers for us, sir. There are too many numbers, Mr. Goel. Good morning. You said slippages by end of FY24 should be less than 1.5%.
1.5%, yeah.
Yeah, and what are the other numbers you said? You threw in a...
Recovery.
Gross NP is 8.74%, and it will be below 7% by March 24. Similarly, the net NP number, which is as on date 2.72%, it will be below 2%. And we have set a target because last year also our recovery was much more than the addition in every quarter. So we are setting a target for the current financial year. Recovery should be double than the addition.
Okay, got that. Just come to the corporate loan growth, which actually has been a little tepid for you. Could you tell us what is the strategy there?
As on date, we are having sanction in hand of around 1 lakh crore, which they have to utilize. Although in last year also, whatever the limit we have sanctioned to the corporate, they have started utilizing also. Because the 1 lakh crore, which I have told you, undisbursement amount, because some of the term loan, which gradually will be disbursed.
All right, Mr. Goel, going ahead, could you tell us what kind of a loan growth are you looking at? What kind of NIMs are you looking at? As well as credit costs. So three numbers I want for FY24.
Yeah, as far as credit growth is concerned, it was 12.68%. So we are setting a target for the next financial year between 12 to 13%. As far as your another question regarding the NIM, it was 3.38 domestic and 3. 0.08 for the global, and we are giving the target for the 2.9 to 3. The reason behind that, because the entire deposit has not been repriced last year, because there was an increase in the deposit rate around more than 200 basis point, which have not been repriced. So this is the reason, but we will try to maintain the NII in the absolute number. As far as the credit cost is concerned, it was 2.04% in the last year, and we are expecting it will be within the range of 8.5 to 1.75.
Sir, just to get the numbers again, you said that you're guiding for NIMs at 3% for FY24. Is that total overall NIM or domestic NIMs?
It is overall, I am telling you, 2.9 to 3. Reason behind that, because lot of the deposit which have not been repriced in the last year, they have to reprice in the current financial year.
Got that. I just had one more question on the growth in advances, that's a very solid number for Q4. 14% up year on year, 3.8% up quarter on quarter. What is your outlook? How much loan growth are you penciling in for, say, FY24? Is it going to be front-loaded or back-loaded? I mean, stronger first half or second half? And within loan growth, just a word on retail, because your retail segment, while corporate has been a little subdued, the retail numbers look very, very smart. I think there's a 40% year-on-year growth, 10% quarter-on-quarter. Do you expect this trend to continue, and could it be any cause for concern? You know, even yesterday we had the Reserve Bank of India governor talking to bankers saying we need to be cautious. It is in good times that bad loans are formed. So your sense on the side of the book that's really growing, which is retail?
You are very much right. The credit growth for the next financial year will be in the range of the 12.13%, and our main focus on the RAM. RAM में basic portion is the retail में housing loan as well as the gold loan. As far as your specific question is regarding the delinquency in the retail, as I given earlier number also, every month we are monitoring all the loan, whether it's a retail or the corporate. So we do not find any worry in the RAM sector also.
Okay, all right. Now, just to move away from the earnings themselves, and let's just talk a little bit about the 2,000 rupee note withdrawal, which has been announced. The exchange starts today, right, sir? Are all preparations in place? And what is your own expectation about how this is going to go? And, you know, one thing which is being talked about from a market point of view is that as a lot of this comes back into the system and is deposited, and these notes then stay in the banking system, it will alleviate some of the liquidity shortage out there. Do you look at it like that? And any estimate internally you have about what percentage of these notes will actually come back and how many will be exchanged? Your sense, sir.
Point number 1, we are fully prepared to take the note either in the deposit or the exchange, and I do not find any liquidity crisis also, which you are just saying, because it is hardly the 10% of the total money in the circulation. So I do not find there will be any shortage of the liquidity in times to come also. And number we have to see how much will come by the September 2023, because 4 months is there, and RBI governor also told yesterday that they will review the position how many currency has come back, and if there is a need also, they will take whether there is a need further increase the time also.
All right, fair enough. We'll leave it there, Mr. Goel. Appreciate you joining in, and hope to speak with you a little later to get a sense of how this is going. Today, of course, is when the entire process starts, that you can go to bank branches and exchange these notes. Well,